Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. There is one large market for U.S. soybeans, and it accounts for more than half of America's foreign bean shipments. Through the first 10 months of the calendar year, China took 56% of U.S. soybean exports. Its total over that time period was up 34% from the previous year. Mexico and Japan together bought 46% of American corn exports, and both imported more from January through October than during that stretch in 2015. We talked with Luke Wednesday afternoon at CVA's offices in York, Nebraska, and began by discussing the current demand environment for U.S. corn and soybeans.
Well, really, Jeff, this goes back to what we saw in Argentina and Brazil a year ago for both commodities. As a lot of people are well versed, we had the corn problems in Brazil last summer with their second crop. It burned up. That really created the opportunity for U.S. corn exports late in the season, and that pipeline in the world sense was really empty coming into our harvest. And so we've just continued to export corn at a pretty good pace. Soybeans, same story. Argentina had the problems last year with the wet weather during their harvest season, so it just created this void in the world marketplace. And so U.S. exports have really stepped to the front to fill that in, really with our traditional buyers that we typically send those bushels to. So we're just doing it on a grander scale compared to the year before.
What impact then has the stronger dollar had?
Up to this point, not what you would think. With the void being there in the global marketplace, there haven't been a lot of options for the Chinese or for Mexico to procure corn from different parts of the world. That's probably set to change here, depending on how the weather plays out in South America.
Right. What happens when that crop comes online?
Yeah, so we're going to start to harvest corn down in South America in the month of January. That corn's going to hit the pipeline at that point in time and satisfy domestic demand, down in Brazil. So their soybean crop got planted in good shape in Brazil. It's going to give them an opportunity to plant their second crop or their safrinha crop in good shape once they get their beans cut. So we would expect corn production in Brazil to be there, and that really starts to cut into the U.S. business come around June when we're harvesting that second crop corn.
With that soybean crop in Brazil, is your expectation that it is going to be as big as we might think it could be?
Yeah, compared to a year ago, we had some of those issues. Estimates have been moving higher. The USDA's recognizing some of that. Private companies, we expect bean production to be up 10% in Brazil versus a year ago. So the beans are going to be there. Corn feels very much the same way.
Let's come back home here. Tell me about the ethanol margins that producers are currently experiencing.
Yeah, so that's definitely been a positive. And even with exports, these low prices and the problems we had in South America have encouraged demand to really step up, and it has. Ethanol margins are very good right now. You've got a combination of cheap corn. Crude oil has been improving, so your nearby margins in the ethanol industry are very good. So that industry is very hungry. We set an all-time weekly production record the week before. This week was just a shade lower, but still very robust. So we're cranking through bushels domestically for ethanol. You step further out on the curve, though, and there's not carry in that margin structure. So the ethanol trade has been hungry up front, but not so much down the line. So we'll want to see those margins continue as we march forward, but corn demand domestically very good.
Go further into what you think higher crude oil prices could do for ethanol.
Well, it's part of that calculation. It's the energy, right? So ethanol is going to compete against crude oil. So as crude prices, increase, that certainly creates an opportunity for ethanol to be competitive. So the other side of that is, we've been producing a lot of ethanol. We've also been exporting a lot of it. So even though production's been very high, our stocks have actually been declining. So that's been pretty positive. Without exporting the amount of ethanol that we have been, you'd probably be looking at a little bit of a different situation.
Let's talk about price outlooks, starting in corn.
Corn market feels pretty doggy. You're really looking at a carryout at 2.4 billion bushels. Your corn exports are kind of on pace, but when Brazil steps to the plate, can we really see that number grow? Ethanol demand probably does grow, but incrementally, 50 million bushels maybe in January. And then feed demand, we'll get kind of an idea of what the USDA is thinking when we see the stocks report in January. So overall, corn really just feels range bound unless we see problem surface in South America. Otherwise, it just feels like a waiting game until we put the corn crop in the ground here in the U.S.
That's the follow-up question. You're not going to be aggressive with selling what's in the bin now.
Well, I think it's you would think not, but one thing that the corn market has in it right now is carry. So if you're a farmer and you have bushels sitting in the bin on farm, and you look out to June and July, there's carry in that market structure. So we've kind of been advocates that, man, if you're carrying 80%, 75% of your corn on farm unpriced, take a look at selling 10 to 15% of that out on the curve, further out on the curve to lock in that carry. The only way to lock in that carry, Jeff, is to sell it. So we've encouraged producers to do that. Never throwing all your eggs in one basket, of course, but with that much risk that they're carrying, not a bad strategy.
Unfortunately, we're talking on a week that hasn't been too kind for soybeans, so I'll ask, even though, what are your thoughts for selling in soybeans?
Yeah, the weather coming back this week, we had rains in Argentina that kind of took the wind out of the sails. Technically, we broke through 1020 on Tuesday's trading session, which is a key level of support. So we've got to watch what the funds are going to do. Without some sort of weather complications in Argentina, it feels like soybeans are due for a seasonal correction lower. We'll have an opportunity in the beans, I think, just because demand's so robust, but you hate to use the element of hindsight, but great opportunities in the last 45 days to have marketed some beans, and still, relative to where we harvest, when we harvested soybeans, prices are still favorable.
Where's your target for the 2017 crop at?
We talk about corn. We would really love to have a 4 in front of those futures. We probably wouldn't wait that long, though. If we had an opportunity to sell a 390, 395, somewhere in there off the Deese board, we'd probably entertain that, especially with where the carryouts are and South America looking like it's going to be there.